Hello everyone, welcome to the Market Outlook this Monday morning. Gaurang Shah here from Geojit Investments Limited. And as I speak to all of you all this Monday morning, around about 10:30, a sea of red in Indian markets following the cues from the Asian peers and of course what has happened overnight in the European and US markets on Friday. Well, as we all know, the aftermath of the so-called economic nuclear war, which is started by the President Trump post implementation of reciprocal tariffs, there will be at least some time before we see any kind of sanity or stability returning into the world markets and our markets. Before I go any further, let me give you certain levels on Sensex, Nifty, Bank Nifty, Rupee Dollar, and crude oil. 2,995 points down. Sensex level is 72,370. 975 points down on Nifty Spot. 21,930 is the level on Nifty Spot. Bank Nifty down 1,185 points. 49,620 is the level on Bank Nifty. On Rupee Dollar and crude oil, weakness of 0.40, 40 paise weakness on rupee against the dollar, and the level is 85.63 rupees to $1. And on crude oil front, we've been seeing multi-year lows. Brent is trading at about $63.18 to a barrel, and NYMEX is trading at about $60.30 to a barrel. Expectation on crude oil and rupee. Crude oil is likely to hit much lower levels, maybe sub $58 on NYMEX as we go into the week and next week, and somewhere close to about $60. Expectation is Brent per $60 per barrel on Brent, and sub $58 per barrel on NYMEX. This is the expected downward move on crude oil prices. And on rupee dollar, well, on 9th of April, we have the credit policy unfolding day after. Expectation is that we should get a 0.25 basis interest rates cut on 9th of April. And the commentary is likely to be dovish. Of course, it would be interesting to listen to the RBI governor post the reciprocal tariff that has been implemented by America on 180 plus countries. What is his views on local and global economy, on GDP growth, inflation, and interest rates? But at least a 0.25 basis cut is what we expect on 9th of April. That may lead to, and of course, the commentary will lead into a little bit of strength in the rupee against the dollar, and expect levels of 85.50 or below that as we go into this week and next week. Now coming to the markets, friends. Well, needless to say, whatever has happened has triggered whatever has happened in form of reciprocal tariff from America on 180 plus countries has led to a lot of reverse calculation in terms of global GDP growth, global economy, and stock markets. It is very difficult to ascertain anything right now given the events in the backdrop and the events which are likely to unfold, because President Trump has said that this is not the end of tariff hike. We may see more tariffs coming in as we go into the future, and that may lead to a lot of uncertainty and bring in a lot of instability. And as someone has rightly said, it is the beginning of the economic nuclear war by America and President Trump. How, when, how long, it's very difficult to gauge. But given the fact that markets are correcting globally, we are not to be left out. We'll also see that kind of correction coming in. But there is still a silver lining to this entire grey clouds that are surrounding the global economy and Indian economy. First of all, we are having a decent GDP growth rate. Second, we are seeing lower inflation. And the third is we are expected to see lower interest rates in form of interest rate cuts. Fourth and the most important trigger is going to be the earnings season, which will kick off from 10th of April. TCS will make the curtain raiser, will be the curtain raiser for the fourth quarter last financial year. And the expectation is that we may see a little bit better earnings compared to what we've seen in the third quarter. Of course, it all depends upon what the final numbers are, and as we dissect it once the numbers unfold in front of us. Just in case if the fourth quarter earnings is a silver lining, then possibly the downside could be protected as far as our markets are concerned. How much? Again, very difficult to say, though I will put certain levels on the Nifty as I go into this outlook of the market for this week. But it is all assuming that nothing worse happens, at least in the near future. So, other than the interest rate cuts and of course the impact of tariff and the economic nuclear war, oil prices have corrected, as I mentioned, to multi-year lows, and they are likely to go down because of the slowdown in the economy and lower consumption. And along with that, possibly if there is some amount of production hike from the OPEC plus Saudi nations, then there can be a little bit of more pressure as far as crude oil prices are concerned. India VIX, as we discuss every week, today India VIX is up at about 20.95, and there is a jump of 52.50% approximately on India VIX, led by the choppiness and volatility. Maybe as we go into the day and possibly into the week, we might see some kind of downward movement in the India VIX, and it can possibly come down a little bit, but one will have to wait and watch. The second factor for this contribution of India VIX spiking up so much is, of course, FIs have again turned net sellers, and they are likely to stay on the sell side for some time. Will be prudent to see how domestic institutional investors are likely to support the market in terms of buy side figures. But they will also, our assumption is that they will also not rush into the market to buy. Maybe staggered buying is something that you might see as far as domestic institutions are concerned, trying to gauge the mood of the market and what happens in terms of economic indicators. The levels to watch out for on the Nifty spot, at least for the immediate short to medium term, 21,800 to 21,900. This is where we are right now, currently very close to these levels. And on the higher side, in case if there is any respite, then 22,200 to 22,300. This will act as a barrier on the higher side. There is a lot of there are a lot of views, friends, in the public domain, both in terms of global reaction to the tariff hike in the US, and within US itself there are a lot of protests. Now, how sacrosanct these measures are, only time will tell. And the outlook in terms of interest rate cuts in US is, at least for the short to medium term, has hit the pause button. My sense is that US Fed will want to gauge the impact of the tariff hike on the US economy, and large part of knowledgeable people are betting on stagnation followed by recession and slowdown in the US economy. The percentages are quite high, the odds are quite high compared to what they were before the implementation of tariff. Now, in this kind of market trends, it is extremely difficult to trade. And just for your information, all indices are currently trading in red, and there is not a single stock which is on the gainer side as I speak to you. All sectorial indices and majority of the frontline players are in red. There is a lot of pressure in the broader markets. Mid cap, small cap, micro cap are also down and out. So the situation looks quite tricky, friends, in terms of taking any kind of short-term call or any kind of contrarian call. but there would be sectorial specific themes which may tend to possibly go against this kind of selling pressure. What are those themes that one can possibly look at in terms of escaping the tariff sword? Banking and finance, capital goods, engineering, defense, cement, power sector, hospitality sector, and of course the much talked about pharma sector. So these are some of the areas where you may see a little bit of less correction, and as and when the markets stabilize or trying to find the base, we will see these sectors performing first and then possibly followed by other sectors. But there is extreme distress and pain in the global economy and a lot of uncertainty in terms of what will be the next move by the US President, Mr. Donald Trump. Though post the tariff implementation, reciprocal tariff implementation, he's made a lot of statements. We will see, hear, and read a lot more as we go into the future. And of course, we need some more time to possibly filter down the information that is coming in and then how it is going to impact respective economies and the stock markets. Till such time, our sense is that we may also react to the way global economies and markets will react, but we'll possibly be the least affected, at least given the kind of data points that we have in front of us. So if you're a trader, short term, medium term, please use your wisdom and fine sense of judgment. Put your stop losses in place so that you're not caught on the wrong foot. And if you are an investor, which we strongly advise in creating and building portfolios in this kind of market, because these are the markets that gives you opportunity to build up a very strong portfolio. Then in that case, you can possibly slowly, very, very slowly nibble into some very strong sectorial themes, and within those strong sectorial themes, companies which are credible enough in terms of growth prospects. We have two themes again bypassing the tariff war that we are seeing across the globe. First one is from the power generation, and we have spoken about it earlier also. Tata Power, a Tata Group company, has got very decent uh, power producing capacity. Plant load factor is also at a very decent level. And the fact that we are hitting 38 and 40 degrees already as far as the summer season is concerned, maybe the rest of April and going into May, the temperatures are likely to soar, power demand is likely to go up. So we believe this is going to be a very reasonable investment idea and theme, bypassing the tariff uh, issues. So the first investment idea is Tata Power from power generation. And the second investment idea again is from a sector which is not directly impacted by what is happening around the world and tariff war, is the hospitality sector, and the company that we have identified as ITC Limited. Hospitality, FMCG, of course, hospitality business is hived off. Core business are diversified and contributing very, very strongly. We believe FMCG sector will tend to contribute from a long-term point of view. And the fact that whatever has happened in the budget, 12.75 lakhs, zero tax, will start being visible, and green shoots will be visible from third quarter this financial year, October, November, December. And you might see earning stability also coming in. Mind you, friends, these two investment ideas are from a long-term point of view on the fundamental side. And like I mentioned during our conversation, start nibbling into them. Don't put all your money at one time. Staggered investment is something that you should always approach any kind of investment themes in the stock market. And then gradually, once you get correction, which we are hoping that you will definitely get, then go on adding into these two stocks if you eventually decide to invest. But please do a little bit of homework and then look at investing into these two investment ideas. Thank you very much for your patience hearing. I'll see you again next week. Till then, please do take care of yourself